Hey, good afternoon. Ryan coming to you again from Denver, Bravo Tango Trading. So I'm going to kick off a series of just super high level trading 101 stuff. So we'll go over what does it mean to be long stocks, what does it mean to sell stocks short, also what we'll dig a little bit into options. So what does it mean to buy a put, to buy a call? What does it mean to sell a put, to sell a call? And I'll give you some examples of my own trading as far as where these have worked well for me and where they haven't. So certainly uh, take it with a grain of salt. Do your own risk assessment of what makes sense as far as your portfolio, your own risk tolerance, what you want to do with your own accounts. Today we're going to start with the basics. So we've just got regular stocks. We're going to buy stocks and sell them, and then we're going to sell stocks short and then buy them back. So we'll start with the long stocks. The split here of winning losing is sort of funky, but for a we'll start here on the left. So a winning trade long stock. We're going to buy 10 shares of a stock that costs $100. That's going to cost us a total of $1,000, and we're not going to get into commissions or any of the extra things that might come into these transactions. But you're spending $1,000. It gets you 10 shares of a $100 stock. So for a winning trade, that stock goes up. So that stock goes from $100 per share to $120 per share. So your profit is just the difference between what are you selling it for and what did you buy it for. So you're selling it for 120, you bought it for 100, you're profiting $20 per share. Because you had 10 shares, that gets you a total profit of $200. So you turned your $1,000 into 1,000 plus $200. So you made 20% on that trade. Good for you. Congrats. Winning trade on the short side of things. So to short a stock is the opposite of going long. So you start by selling shares. So I'm going to borrow 10 shares from a friend and I'm going to sell them for $100 per share. So I get paid immediately for that. So your proceeds, what you get cash in your account when you sell shares that you borrowed from somebody else. In this case, again, it's 10 shares. You're selling them for $100 a piece, so you get $1,000 cash in your account. Again, there's margin requirements with this. There's fees. There's other things that come into play, but we're going to keep it pretty simple. Fast forward, this is a winning trade. So you borrowed the shares for $100, and now I'm going to sell them. I'm going. I borrowed the shares and sold them, so now I'm going to buy them back in order to give my broker back the 10 shares that I borrowed. So I'm going to buy them back for $80. So my profit per share, because the stock went down in value, was $20 per share. So I sold them for 100 and now I'm buying them back for 80. So I profit $20 a share. I had 10 shares, so I profit $200. Again, I turn my, well, it's not exactly the same, but I think of it as I turned $1,000 into $1,200. But it's a little more nuanced than that. But to keep it pretty basic, you're borrowing 10 shares, selling them, and then you hope to later buy them back for a lesser dollar amount. Again, this all comes down to you receive money up front. So I borrow something, I sell it for $100. I need to give that thing back to whoever I borrowed it from. So I hope in the future I can buy it for less, and then I give that thing back to my broker, and we're all happy. I made some money. They loaned me the shares, and I made some money because I was able to buy it back at a cheaper price. Losing trades, again, we're back on long stocks. So I buy shares. I buy 10 shares of $100 stock. Cost me $1,000. The stock goes down now. So I then sell the shares for $80 a piece. So here I get a loss of $20 per share. So I purchased the shares for 100. Now I'm selling them for 80. So I lose $20 a share. Because I had 10 shares, I lose $200. So I effectively turned $1,000 into $800. So I'm down 20%. A losing trade on a short position. So again, you borrow 10 shares, you receive you borrow 10 shares, you sell them for $100. So you receive $1,000, and then the stock price goes up. So then I owe my broker 10 shares. So I have to now buy them at the market price, which is $120. So it cost me $1,200 to buy the shares back and give the 10 shares back to my broker. So that's again, that's a loss of $20 per share. 10 shares, $200, you lose 20% on that trade. So the concept of going short is sort of the inverse of going long. You're doing things in an opposite order. You're selling to open the position, and then you're buying them back when you want to close out the position. When you're long, you're buying the positions to start with, and then you're selling them to close out the position. So just it's a little bit nuanced. It took me a while to wrap my head around it, but it's not terrible. If there's any questions, leave them in the comments. Otherwise, hop on the BravoTango.com. Excited to have you. We've got free memberships for all new users through July, rather until July, so July 1st. Anyway, so welcome to the channel, welcome to the platform. Look forward to going through this journey with you. Hope we are all able to learn something along the way. So thanks. Have a great night. Bye.